Today's topic is about news. I want to show you how to make use of the news. The primary objective of news is to inform the public objectively. However, in the real world, we find that other purposes are being used. There are news that are created out of nothing. We call these rumors. You have to beware. News to sell a product. We call them advertising or peddling. News to please. Entertainment. There is also propaganda news used by politicians or talk show hosts. There are news that can be interpreted by reporters far from the truth. And news you can release at convenient times to serve a specific purpose. If you look at some of the communist states or states controlled by dictators, you see that the government controls the news, or maybe an authority of the state controls the news. And if you see that the news come from a single source without much competition, you know that this is not the true news. So you have to be aware of all of those. How do you make use of the news? Well, first of all, you should not take the news for its face value. You have to think about it. You have to read between the lines, not follow the news blindly. Most of the news are outdated, especially for the stock market. So I'm going to give you some more details why they are outdated. There are a lot of misleading or misrepresented news in the stock market. I'm going to show you some more details later. There are news that give you a direct, quick impact. I'm going to show you which ones. Just a minute, we've got an uninvited guest here. There are news that give you a lot of uncertainty, and you have to be able to distinguish what are they, because uncertainty always causes the stock market to come down. Joys and fear, you can see it from the news. How can you tell? The most important thing, of course, is the cause and effect of the news, but this is very hard to see through. Now we come to outdated news. In the stock market, you can be sure that over 90% of the news that you receive are outdated. Why? Very simple, because the news is about the past, what has happened. The stock market always looks ahead, several months ahead, what will happen. So that's why the news that you have is always out of date. That's why you cannot take the news for its face value. You have to use the news as an important background so that you can make good judgment about the immediate future. Let me give you an example. A company just announced record profit for this latest quarter. Do you rush out to buy the stock of that company? I advise not, because the record profit may mean that this is the last one before a long downturn. So if you go out to buy the stock, you are stuck with that stock for a long time. You have to watch out that news can be misleading or misrepresented, because news are always subject to interpretation by the reporter or by the analysts. News can be released at a convenient time to serve a special purpose. And there are always news to seduce the public to buy the stock, because the big guys cannot cash out if there is no public participation. You have to give them the money so that they can cash out of the stock. Some news are very important. You can take them for face value because they usually have a direct, quick impact on the stock market. And those news usually contain the element of surprise or shock. First one, very common, is the world oil prices. The stock prices of oil companies and airlines are always driven by the price of oil per barrel in the world market. Sometimes the company announces merger or takeover, which has a surprise factor. Then it can cause an immediately change in the price of the stock. Another thing that has to do with unexpectation. Sometimes a company unexpectedly gives out warnings. Warnings can be good or bad. If it is good, the stock prices will go up. If it is bad, it will come down. There is a sudden fall of a big company. It may happen. Then we may see a decline for that company, stock, or maybe for the whole industry. And this one, of course, is a shock, terrorist attack, war, or a natural disaster. Besides the element of shock and surprise, there's always some news that can cause the stock to come down. This is uncertainty. So you have to be able to determine what is the uncertainty. Financial crisis that we're having now is an uncertainty because we always think about how deep and how long it's going to last. And the financial crisis caused the global recession, and we also have to ask how deep and how long. And this, in turn, affects the consumer and business confidence. And we ask the same question, how deep and how long? Unemployment figures, because unemployment changes very slowly, so it gives you a lot of uncertainty. Inflation also, it creeps up, gives you a lot of uncertainty. And government deficits give you a lot of fear because you don't know what will happen if the government incurs huge deficits. Another factor is political instability. Joy and fear. We know that the stock market always reacts to emotions. And joy and fear are the emotional extremes that you can see in the stock market. Joy leads to a bubble, and fear leads to panic sale. Can you see when there is a joy? It should be very easy. When you go around, you see everybody talks about the stock market. The taxi driver, housewives, janitor, doctors, dentists, everybody talks about the stock market. You know that we are approaching this emotional extreme. Fear, on the other hand, you can see when everybody is so depressed, everybody thinks that the sky is falling, then we come to the fear situation. The last one is cause and effect. In fact, this is the thing that we always think about. When we hear news, we always ask, what is the effect? The difficult thing is that there are many factors involved that cause the stock to go up or down. So many factors, some of them got balanced out by others. It is the net effect, the balance of the effects that matters. And this is very hard to determine. So an easier way is that you try to identify the major factors, because many factors have no consequences, only a couple of major factors that can tell the effect. And what you need to do is to focus on those and ignore the small ones.